with us this morning. Eddie, you've been right. We are indeed seeing the year-end rally that you predicted. My question is, after we get big tech results today and tomorrow, does the rally hold?
Stuart, I think we'll probably hit some short-term resistance levels as we go into November, and we may get a 3 to 5% pullback like we saw in October, like we saw this month. However, I do believe tech earnings are going to be strong enough to keep this bull market intact and continue to trend higher over the next several months. And the other thing is, if the Fed announces the end of quantitative tightening today, in conjunction with cutting rates, that's like putting steroids into this strong market already. It's just really an unprecedented time period. In the 90s, when we had the tech boom, which is what we're relating this to, they were raising rates. We have a Fed that's going to be cutting rates and adding liquidity at a time when the market's already at an all-time high. So I think this economy is going to boom, and people are underestimating the growth trajectory on the economy as well as stocks.
So you would buy any dip?
Absolutely. That's been the playbook since May, and I think that's going to continue to be the winning playbook. Too many people have not been in this market, and I think you're going to see them capitulate as we go through the last leg of this bull and take things much higher.
Well, we got a bull market in stocks. Do we have a bull? We did have a bull market in gold. Is that gold bull market over?
It is not, Stuart. After a 60% move this year in gold, to see a little bit of a 10% pullback should be expected, and it's healthy. We believe the bull market in gold is going to continue to trend higher as deficits continue to explode around the world. You have central banks around the world continuing to accumulate gold. So for those that have not been in gold the last 2 years, this 10% pullback would be a great opportunity for them to go ahead and dip their toes in and get allocated to an asset class that we think will continue to far outweigh other defensive areas in a portfolio.
You are buying Apple, I think. You want to tell us why?
Yeah, so Apple, has been the one dog of the Mag 7. When you looked at August, it was down 17% on a year-to-date basis. We started accumulating shares then, and we think now we're starting to see iPhone sales in China really accelerate. We think we're going to get a China trade deal, and all the stars are aligning for Apple to have a really strong next 12 months. So it's really a contrarian play that has got a lot of catch-up to do. And to me, it's a safer big name to own with a great balance sheet. So we're going to be overweight Apple as we go into 2026 for our clients.
I'm interested in what guys like you manage money, you're an investment advisor. What do you do on afternoons like this afternoon where you've got Microsoft coming in, you've got Meta coming in, you've got Google coming in? What do? You sit across from the screen? Do you ever trade as soon as the results are out, or you just let things settle down?
We stay glued to the screen to see the reaction, but we never usually will buy right before earnings or right after earnings because you're going to see a lot of implied movements in there. And then you just want to kind of sit back and listen to the earnings call, because the guidance moving forward and earnings growth trajectory is going to tell you more than what that actual number is at that moment in time, because the market is going to be forward looking and demand is going to continue to increase in that space. So regardless of the short-term move, we always try to look out 3 to 4 months as to where we think that trade is going to be, and that's when we will gross up and get big in the position that we have our strongest convictions on.
Yeah, for investors, afternoons like today, it's a knuckle-biting time, high anxiety, but intensely exciting. Thanks very much, indeed. We'll see you again soon.